What's going on, everybody? Welcome into the Monday, January 20th, 2025 edition of the Daily Energy Newsbeat Stand-Up. Here are today's top headlines. First up, U.S. shale's capital discipline outweighs Trump's pro-growth rhetoric. It's almost like we know what we're talking about, Stu. Next up, days before Trump takes office, Brayton Point loses $300 million offshore wind cable plant development project. This one's super interesting. We'll go abroad next. China and India scramble for crude as sanctioned Russian tankers turn back around. Will come back home. U.S. Treasury to take, quote, extraordinary measures after Trump inauguration. And finally, back abroad, Ukraine threatening the new European energy crisis. This is an opinion article that's got some interesting stuff in it. Stu will then toss it over to me. I will quickly cover what's going on with oil and gas prices and then talk a little bit about a rare look into some successful offshore drilling economics, which I always find fascinating. We will cover all that in a bag of chips, guys. As always, I am Michael Tanner, joined by Stuart Turley. Where do you want to begin?
Hey, let's start with drill, baby, drill. Drill when fiscally responsible. When U.S. shale capital discipline outweighs Trump's pro-growth rhetoric. It's an interesting article, and this actually comes from Rystad Energy, our folks over there at Rystad. There's three main bullet points, Michael, and then there's some details in here. U.S. shale producers are focused on capital discipline. Really? We've been saying this for quite a while. And shareholder returns. Increased Permian rig activity is unlikely due to significantly boost production due to inventory depletion and efficiency concerns. I believe this great man has been talking about that. I believe his name is Michael Tanner. Oh, yes, thank you. Sorry. And then the U.S. is already on track to meet Besant's 333 hydrocarbon production target without policy changes driven by NGLs and gas. I'll tell you, the growth could come at the expense of a capital spending more than $11 billion, while Permian reinvestment rates are also expected to edge higher during 9% points. It's pretty interesting. I love the folks over there at Rystad. They normally have some good stuff.
No, they have great stuff. I love this look because, again, I think it piggybacks off what we've been saying here on the podcast, Stu, that, yeah, I think drill, baby, drill, while that's great rhetoric, and I think, corporate executives, as this article talks about, are going to be encouraged by this. It's not necessarily going to all of a sudden, oh, well, we got to pick up 3 rigs now. Nobody's sitting there like that. They specifically mention, Shale 4.0, which, really is a combination of the learnings from 3.0. What went on in Shale 3.0? Increase production at all costs, show production growth, show inventory. Not really what's going on now. It's all capital discipline. It's all consolidation. It's how do we squeeze the most amount of profit out of what theoretically is a declining inventory count, not necessarily declining well count, not a play on words there, but a diminishing, economic inventory at these prices. So it's going to be really interesting. I mean, this article does point out that Trump's Treasury Secretary Scott Bessent has floated an increase of 3 million barrels of oil equivalent per day as part of his broader 333 economic plan. Again, whether that's BOE or barrels of oil, who knows? As always, there is a BOE. It's a sleight of hand. If someone's throwing BOE at you, you should ask, well, give me the breakdown. What's your gas versus oil? Because you're sometimes using, it's a 6-to-1 ratio to convert gas to oil equivalent, but it's about a 20-to-1 economic conversion. So if someone's giving you BOE and they're doing it in 6-to-1, it's look over here, not over here, because it can be a sleight of hand. So it'll be interesting to see what he says underneath. But again, I think what this does is specifically underscore and things that we've been talking about in terms of Trump is not going to be able to just wave a wand and increase production, because if it wasn't like there was production being held back in the previous administration, for all the knocks that Joe Biden gets, one of them can't be, oh, he's holding down oil production. It actually increased under his administration, whether he likes it or not.
Well, the malarkey that they did under the Treasury, we'll talk about her haircut. I mean, we'll talk about her here in a second. But the stuff that they just put out will cost a lot of people a lot of money in all this stuff. But let's go to the next story here. Days before Trump takes office, Brayden Point loses 300 million in offshore wind cable plant development project. This is actually very important because instead of drill baby drill, it's the whales are going to be happy on this one. When President Trump has said that he's going to put a moratorium on offshore wind for several months while they take a look at it, the Italian company seeking to build a cable manufacturing plant at Brayden Point in Somerset, Massachusetts, pulled the plug on the $300 million project Friday, dealing a blow to the offshore wind development on the East Coast. The prison group spent nearly 3 years obtaining all the necessary state and local permits, including beating back a regulatory challenge brought by a handful of neighbors at Brayden Point. But you know what? This is all out of the Inflation Reduction Act and the Porculus bill. This brings us
Mhm.
back to the drawing board. It is a major blow. Sousa said, we're scrapping. We're down to bare bones. Sorry, it's just not going to be feasible. We're going to have a lot of projects, Michael, that are going to get canceled.
No, we will. And, if there's one stance Trump has taken, it's that he doesn't like offshore wind. And why, that's, I think for a bunch of different reasons. But to consider the amount of money that they spent to get this project to this point and then walk away from it means they're very concerned about the ability for it actually to ever get done. I mean, they're probably 10, 20, 15, 10, 15, 20 million dollars in the hole on this project. So, I do think that they're
I'm
making a long-term decision, and they're probably hearing stuff from the incoming administration that says, good luck with that. We'll see how it goes.
and they're Italian based, and Trump is trying to say we want investments in the US. Let's go to the next story here. China and India scramble for crude as sanctioned Russian tankers turn back. This one is very interesting. Here's a quote out of the article. It is even likelier there will be a sustained market disruption, Fishman added. We could see a meaningful drop in Russian exports. I think that it's going to be ended fairly soon. So I don't think this disruption. In fact, I think we're actually going to see sanctions being released on Moscow because when you take a look at China and India, listen to this, have bought 81% of Russian seaboard crude exports since the invasion of Ukraine. Now, Michael, here's where it gets funny. India and China's refinery capacity has grown substantially. The US's has shrunk. So, guess who's selling Russian refined products? India and China. Guess who they're selling them to? The US and the EU. This is a gigantic can of worms.
It really is. I'm talking about the dark fleet. This is going to get super crazy. I think a lot of this is what you're seeing reflected in kind of the current weekly bump in prices. I mean, we saw, early in the week, prices were above $80. We're now kind of sitting in that 77, 78 range. But you're talking about 600 or 161 tankers are involved, and about basically 2,000 shipments have been sanctioned since the old invasion. But now it's continuing to match. India and China are going to get and are already seeing effects of this being turned away. It's about 1.4 million barrels of crude oil per day, according to an estimate from the some London-based EA Gibson Shipbrokers Limited. This equates to about half of Russian seaboard crude exports, which is pretty unbelievable. The Macquarie Group estimates that this can be even greater at 2.15 million barrels per day of global exports, which obviously could drive up prices. So it's a big old hairy mess. I don't know what's going to happen here. What's the read on the Trump admin stance on this? Are they going to keep these sanctions in place? What are they going to do?
I think it's going to be dependent on the negotiations on ending the war. It is so important for President Trump to end the Ukraine war immediately. And I think that sanctions are going to ease. Everybody's saying, oh, sanctions are going to stay in place for a long time. And the Democrats are quite honestly putting some landmines out there. They are despicable players in this whole process. But I believe that Trump is going to meet with Putin sooner than later. So I think it's going to be great. Let's
Yeah.
go to the next story here. Speaking of bag on somebody's head, I mean, get a bag for get a barber for this person. Janet Yellen, I'm so glad that she's out of office, but I'm going to lose a lot of my hair jokes. You know, I have a lot of rocks to throw here. The U.S. Secretary of Treasury to take extraordinary measures after the Trump inauguration. This raises some serious questions for me, Michael. Serious. She is saying that she needs to take extraordinary measures not to go over the debt limit, but they're going to not pay out retirement from the U.S. Treasury to the individual. How much are they paying their retirement people?
No idea.
This one reeks of like, holy cow, Batman, she's incompetent. But how bad is it? Because we are going to come up against a budget, the debt limit, and it is going to be a problem for President Trump. I was watching Professor Strange, and Professor Strange has got it right. The Biden administration overspent by $2 trillion. That's another $7 trillion the Biden administration has spent. That is the most expensive presidency in the history of this United States. Unbelievable porculus going on. And this is despicable. Let's go to the next story, Michael, before I lose the blood vein. Ukraine threatened new European energy crisis from Orban. Hungarian Prime Minister, he's actually kind of entertaining. I've always enjoyed trying to watch his. Orban made the remarks Saturday in Belgrade, where he met with Serbian President Vucic to discuss the security of energy supply in the two countries. In recent days, unfavorable developments have occurred in Europeans' energy supply. The Ukrainians have shut down the pipeline through which gas was supplied to Hungary, and the outgoing U.S. administration has introduced measures that would have raised energy prices as well. He's talking about more sanctions around the LNG tankers. Oops, because
Yeah,
the
it's
ugh,
interesting.
it is a mess out there. I mean, if you don't have hip waders, you better get a pair.
Absolutely. I mean, Russia knows that the energy it provides to Europe is its key negotiating tool in this whole region. The other side of that is so does the Trump administration. They know that as well. So energy will be at the center of the negotiation table when eventually these sides get
Oh
together and
yeah.
try to hammer out a deal if they haven't already.
I want to tee up Steve Reese. I just finished my interview with him this Friday, and Steve Reese had talked to Harold Hamm. He talked to Toby Rice about LNG exports. He has got a company that is the first company in the United States that is cradle to grave, all the way from the pumps to LNG export facilities to Germany. They own the import facility there. So this is a huge deal to try to save Germany. I don't know that they can do it, but boy, they have got the whole right business model, and they're going to expand it out in all these other places. That's what it's
No,
going to
they
take.
they absolutely do, and yeah, it's going to be interesting. Let's go ahead and jump over to finance. But before we do that, we've got to pay the bills. As always, thank you for checking us out via the world's greatest website, www.energynewsbeat.com, the best place for all your energy and oil and gas news. Stu and the team do a tremendous job making sure that website stays up to speed. Everything you need to know to be the tip of the spear when it comes to the energy and the oil and gas business. You go and hit that description below for all links to the timestamps, links to the articles. You can also go ahead and check us out on Substack, theenergynewsbeat.substack.com. The best ways to support the show. Go ahead and sign up for a subscription, guys. We really appreciate all of our current subscribers. And it's, again, the best way to support the show. We're dropping a lot of paid-only content recently, so if you do sign up for a paid subscription, you will get access to a bunch of other stuff. I've got a follow-up to a white paper we posted last week coming this week on some critical mineral stuff. Stu's got a bunch of stuff that he's dropping on natural gas, LNG. So it's a blast over there. Again, that's theenergynewsbeat.substack.com. investinOil.energynewsbeat.com. And then you can also visit us, investinOil.energynewsbeat.com. It's never too early to start thinking about, one, cash flow for 2025 and reducing your tax burden. Again, anything you invest, even if it's in January of 2025, you can in oil and gas very easily write off. And you can also become Billy Bob Thornton from Landman. So again, I can't stress that third piece enough. If you want to be held up by the cartel because of a surface use agreement, I promise you investing in oil and gas will get you there. That's investinOil.energynewsbeat.com. Let's go ahead and look at the overall markets, though, Stu. On Friday, S&P 500 was up about 1 percentage point. NASDAQ up 1.6 percentage points. Two-year yields up 1.2 percentage points. 10-year yields up only 0.2, so about a percent spread between the 2 and 10-year yield. Dollar index up about a half a percentage point. Bitcoin up above 100,000 at 104.8 at $104,000. It'll probably rip tomorrow with Trump being in office. Crude oil actually dropped about a half a percentage point on Friday, down to 77.39. Brent was actually slightly up at 80.71. Natural gas fell about 30 cents, or about 7.2 percentage points, below $4 to $3.94. XOP, which is our EMP contract, was basically flat, down about 0.2 of a percentage point, down to 145.45. It's fourth straight weekly gain. If you kind of look over the long term here, a lot of that has to do with those U.S. sanctions that ended up on Russia. Phil Flynn, he's quoted a lot here in these articles. Sanctions on Russian are causing tightness of supply in Europe, China, and India. Wow, what a fascinating quote there. We might need to dive into that a lot more. We're also, again, I think people are, as you listen to this, the inauguration is happening. There's an entire new administration coming in. So I think it'll be interesting to see what happens. We do know that the incoming Treasury Secretary, Scott Bassett, he's already ready to impose tougher sanctions on Russian oil, which is only going to drive prices up. I always like looking at the Commodity Futures Trading Commission report. They show that money managers actually increased their net long crude futures and options positions as of the week prior. So people are getting ready for potentially some higher prices, which is interesting. And it was about 8,000 contracts that were being held, which is pretty interesting. We have seen a potential ceasefire deal in Gaza, so that is interesting. The Israeli Security Cabinet did approve that deal on Friday, which hopefully paves the way for some hostages being returned as early as Sunday. I think we're also going to look, and people are looking at some specific China data to see what happens. I laugh when it says China has announced that its economy fulfilled the government's ambitious 5% growth for last year. It's like, yeah, I'm going to probably take the counter to that. But hey, it does not matter. We did see China's oil refinery throughput in 2022 fell for the first time in 2 decades, outside of the pandemic of 2022. So it's a little interesting. Our economy grew at 5%, but we used less energy. I don't know if that equates in my mind. It's going to be really cold this week, folks, so stay warm. We also did see U.S. rig count drop by 2. Again, this goes back to the first article we talked about. There's not much Trump can do to raise rig count. The only way to raise oil production is to raise rig count. So what's going to happen there? Who knows? But again, we did see rig counts drop by 2. The last thing I always find interesting is, if you don't have any high-priced production software like Inveris, well, Database, our personal favorite here, I always find it interesting. So, we actually see a press release where they announce some offshore well results. I've always find that super interesting. Talos Energy, I mean, they've been going through it a little bit. Pretty intense management turnover there. They announced on Friday, though, that their latest Commodity West number 2 well, which was located in the Ewing Bank area of the U.S. Gulf of Mexico, has successfully encountered commercial quantities of oil and natural gas, 35% under budget, which is interesting, 400 feet of pay. But
35% under budget?
Yes, which is great. Now, who knows what that budget was originally? Did they just goose the AFE? Trust me, I've seen it all, Stu. But this is what I always like to see. Expected delivery from the well in line with pre-drill estimates, 15 to 20,000 BOE per day. So that gives you an idea, folks. You go drill an offshore well, you need somewhere between 10 to 30,000 BOE per day in order to make that thing economic. That's moving, folks. That's moving some liquid right there. It's also TVD, total vertical depth, 27,000 feet. So I mean, it's pretty down there. So I was just like, throwing out there when we do see some public well results, or at least some expected public results. I like to throw it there because I think it's interesting. People always ask, how much does an offshore well do? Well, here's kind of, if you don't have a high price software like Well Database, which isn't high priced, very economical. And we're talking about their counterpart in Varus, which will ask for your firstborn son. But second, you get a little estimate right here. So I love that. Stu, what should people be watching for this week? I know you're celebrating tomorrow as you listen to this today. You'll probably take the day off, but
Oh no,
it's not paid vacation, I promise you.
Oh no! Tomorrow morning or today, when we go through this, I will have been on the. By the time people are listening to this, I will have been on the Energy Realities podcast with David Blackman, Irina Slav, and Tammy Nemeth, and we're going to be talking about what land policy landmines did the Biden administration leave the world. Oops.
Yeah, no, and we're turning the leaf to a new era. It's going to be awesome, and we will hopefully again be able to see some stuff. But it is going to be interesting to see what all this does with energy. But as we would say, great day for the United States. We're excited over here, guys, and we appreciate all of you tuning in and making us part of your week. But with that, guys, we will let you get out of here. Go ahead and start your day. If you have the day off, great. If you're like us and got to work, well, guys, this show was meant for you. For Stuart Turley, I'm Michael Tanner. We'll see you tomorrow, folks.